What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down some very, very key factors that are affecting the way in which the market's moving, what's happening with CPI coming for tomorrow, what's going on with Donald Trump's tariffs, and some more news involving geopolitics that could affect the stock market. Just note that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you guarantee 30 in total, not to mention 8.1% APY in uninvested cash. The offer ends at the end of March. Anyways, now let's talk about what's happening with this market. So the market started off with quite a bit of consolidation. We did try to bounce a bit after we got our JOLTS reports, but then we saw Donald Trump announce that he wants to increase tariffs on Canada to 50% on steel and aluminum imports as a retaliation move after what they wanted to do with electricity. However, Donald Trump did back down on that ultimately, and he wants to keep things at 25%, so that's some good news. And then the market also bounced because of some news involving Russia and Ukraine, only to come back down. So there was so much news affecting the markets. I'm going to break down everything and make it very simple. But overall, just let's make it clear that the ETFs we have, like SPY, the QQQ, the Russell, they're kind of weak right now, somewhat in the red. The overall market was quite red. We did see some green tickers, though, such as like Amazon, Tesla, Nvda, and many other big tech stocks. But Apple remained kind of weak alongside many finance stocks, looking at like JP Morgan. Health technology was kind of weak in the sectors. The majority of sectors were kind of like red. So what's happening now? What's going to be affecting the markets? Let's talk about this. Tomorrow is going to be Wednesday, March 12th, 2025. 1 hour before the market opens at 8:30 a.m. Eastern Standard Time. We have CPI data coming out, which is going to be very important for the Fed's policies. Jerome Powell said that he's not going to be making changes to interest rates and their overall monetary policy just because of Donald Trump's tariffs, but the effects that are going to be having at least on inflation, the effects that we're going to be looking for on this data. And the Fed is on a hold right now because they want to see us get a lot more certainty. So that's what Jerome Powell said. That's why it's very important to give the market some time to develop. Now, we have core. Month over month, we want this to be at 0.3%, a slight decrease. Core year over year, we're expecting 3.2 to 3.1%, a slight decrease. For all items CPI month over month, we're expecting 0.3%, a quite interesting decrease. And finally, we're expecting a decrease year over year to 2.9% for all items. So we're basically expecting CPI to come down during this report. That's the big expectation. Will we get that? Well, one thing worth mentioning is that there's been an uptrend in CPI. Keep in mind that's happened before in the past, only for it to come back down. So just because there's an uptrend, it does not mean it's going to last forever. We want to see all items see the first decline that we've seen in many, many months. It's been trending upwards for many, many months. So we want to see this come back down. And then for core, we also want to see this come down a bit as well. So we'll see if we get numbers like that. If we get a hot CPI report, that could cause the market to dip a bit. If we get a decent one, that could help the market to some extent. Right now, when you look at crude futures, what you'll see is that back in January, when CPI went up, we also saw crude go up to about 74.81. Crude came down to about 71.22 for the month of February. So there's a slight decrease there. That does open some hope that CPI will be aligned with expectations. We don't know for sure, though. The data could be very manipulated and very affected by other factors. But for now, the trend does suggest we're going to get an as expected CPI. Three more factors affecting the markets. Okay. Number one, Donald Trump and his tariffs. So tomorrow is the deadline for his tariffs on steel and aluminum imports. The market's been dumping as a result of this. Donald Trump initially said that he wanted to double down on the Canadian tariffs, increase them to about 50% on steel and aluminum because of how they're responding to, the export taxes on electricity. But then he mentioned that they're kind of like backing down on that. And they're saying that they're going to be scrapping that plan and they're going to keep them essentially the same. At least as of right now, that's what I heard Donald Trump say. So we're expecting a 25% tariff on steel and aluminum with no exemptions or exceptions. It's going to be going onto effect in Canada as soon as tomorrow. So March 12th, that's what the White House has said. This is also going to be affecting other countries once they start to, put that fixed amount for steel and aluminum imports for all these different countries. So that's a big piece of news. Not the best, at least for the markets. That's part of why we saw some volatility and some weakness. But there is some good news, okay? What could help the market bounce is this news right here. Ukraine has agreed to a temporary relief ceasefire with Russia on Tuesday, negotiating outside and very, very close to like Saudi Arabia. So that's very important news. We're still waiting on Russia for now, but if they both agree to a ceasefire, whether it's 30 days or even like longer, that's still a good piece of news that could actually help us to some extent. That could be good for the markets, so we'll see. Right, with as soon as this news came out that Ukraine agreed, we saw SPY go from 552 to about 564. So we got a big bounce. We bounced over like 13 points in a single day within a couple of hours over that news. So just goes to show how that could affect things. And then the last thing is this right here. The US House of Representatives have passed a measure to keep the government funded through September. Mike Johnson did mention this. They want to keep their GOP Congress united and pass the measure very, very quickly. And now that the House has passed it, I want to make it very clear that we're going to be listening to see what happens with the Senate, because I think it has to go to the Senate first, and then it's going to go back to the president and he's going to be signing it. So what's happening is if the US does not pass the funding bill by Friday, we're going to have a government shutdown, right? Lots of federal employees won't be paid. It's going to be a disaster. And what typically has been happening for the last couple of years is they get very close to the deadline and they just end up passing the measure, which tends to be bullish for the markets. So this could be a good factor as well. This could maybe help the market bounce to some extent. So what I think is going to happen is I think that now that the Senate has this in their hands, they're going to be looking over this for the next like 2 days or so. Then it's going to be passing on to Donald Trump, and he will most likely sign it instead of causing a bigger disaster. He should do that. And then once the bill passes, that's going to be good, at least for the stock market. So that's something that's worth mentioning. Lastly, I just want to say that we have very minor earnings. We just have lots of retail for the rest of the week. And the market is extremely fearful. There's a lot of fear right now. People are panicking. In fact, we're at the lowest fear and greed index rating we've seen since like July of last year. In fact, when the market got its big dumps, it was at 17. We're actually at 16 right now. So there's extreme fear in the markets. Momentum is at extreme fear as the market is dumping. The put to call option ratio is elevated. We're seeing a lot of put buying that's going on. And the VIX has been continuing to run to extreme fear mode. That means that the market is still bearish until we get some kind of balance. We'll be watching that very closely. My prediction yesterday was that the market would dip a little bit more today, and that was correct. But then I said there's an increased probability of us getting some kind of balance move soon. We're just going to wait and see what kind of response we get to CPI. So as far as SPY goes, it's actually quite simple to watch this. If we could base between 550 to 555, there's a good chance we try to bounce back up towards where this wick is, to 565, then eventually back into the 570s if we get a good CPI. If CPI is hot and this ends up losing 550, we're going to be dumping towards 540 pretty quickly if we end up losing 550. So it all depends on if we could hold support or not. Will we see the bullish case pan out like this for CPI to be decent and when the market starts to reverse with all this positive news that's starting to come out? Or are we going to see a big rug pull to start dumping like this? My gut tells me we're either going to do something like this where we get like one more liquidity grab and then we start to rebound for a temporary bounce going into like the end of the week. I find this to be the most likely possibility. There might be one more fake out for the bears before we see another squeeze, but we'll see just to be safe. The reason why it's very possible the market tries to bounce is because we got this bullish divergence on the 4-hour time frame. On the daily time frame, technically we're not really developing it on the daily, but we are in a very, very oversold position because typically when your RSI is this low, we do tend to bounce. If you look back at the charts, the RSI back in like, for example, August of 2024, it was actually at about the 30 area. So it was all the way down there. We bounced right over there. We never saw the RSI this oversold in a very, very long time. This is actually lower than that period. We saw the RSI back down towards the 28. So we're in a very, very oversold position. We're starting to see a high volume selling, which is leading to some capitulation. I do think we're starting to see some of that. And typically when that happens, that's when you see the market attempt some kind of reversal. There's a good chance that could be what's about to happen, but it depends on CPI. So I'm very, very open-minded that the market could either dump or pump depending on CPI. Based off the bullish divergences and how much we've dumped so far and how oversold we are, that makes me kind of favor upside a bit more. So I am a little bit more optimistic with Donald Trump's tariffs, which are about to pass, because the market should have hopefully fully priced those in. And then we also have like the funding bill coming. We have a potential ceasefire between Russia and Ukraine that could be coming very soon. And then we also have CPI and PPI. Hopefully these things help the market bounce. So I am kind of favoring that. But this is what I basically see happening. Maybe some kind of Depending on if we gap up or not, we'll see if we get one more sell-off move to grab liquidity here before we start to pump. And we see this reversal move just temporarily, right? Just a temporary bounce by at least 20 or so points before we see the next leg down. I'm thinking that's the most likely possibility. There could be another leg after that, but we'll have to see about that, right? We could be still dumping to like 535 or so. But this is what I'm basically eyeing, a move like this. We'll see, just to be safe, guys. So we'll see if we get that bounce and watch that after CPI comes out. For the triple Q, the 4-hour also has a somewhat bullish divergence. It's not as strong. But I want to say that the 4-hour is holding up a little bit better as we're trying to base when it comes to big tech. If we lose 468, that's going to be a bad sign. We could be dumping all the way down to the low 460s. That's more bearish. If we're bullish, you want to see us form a double bottom here and basically base. If that's the case, we're looking for an attempt to get back up to this resistance. If that breaks, you want to see us get back above 483, then eventually into the 495 area. And we'll see if we get a rejection off that or not. My gut tells me, this is my prediction. I could be wrong. I can't predict CPI, guys, but this is what my prediction is. We might see a reversal. We'll see if we get one more liquidity grab down here or not. I'm not sure about that. But ultimately, I do think that by the end of the week, if not by next week, we should be trying to push back into the 490s. I think there's a good chance we see a temporary bounce. We are due for that with this divergence that's developing. We have a nice bullish divergence, and we also have a good chance of that happening with how much we dumped without any kind of major bounce. So there's a good chance we see that with all the good potential catalysts that are starting to come. On the IWM Russell 2000, we have a bullish divergence. If we end up losing 198, we could be dumping all the way down towards the low 190s. If we manage to break past 204, we're looking for a big bounce. Like I said before, there's like a bullish case. There's a bearish case right back down to break these lows. I'm looking for maybe we'll see some kind of like gap up with CPI, a pullback move, and then a continuation like this. That would be very, very healthy to see us get back to like 208 or so, at least maybe even above that. I also want to mention that we're at support on ES. We have this yellow trend line acting as support right here. I would like to see us bounce off of that, especially because we have a very clear bullish divergence. It's a very small one. It's very small. It's not as big as before. So why do I say that? The 4-hour is kind of starting to turn. We also have this bullish divergence on the RSI here, looking at the price action. If we are bearish, okay, you want to see us essentially dump and lose the support around 55.50. If that's the case, we could be dumping into the low 54.80s. So be very, very careful. If we get back above 56.71, we're looking for an attempt to get back up to about 5,700 plus. We're trying to hold this support where this yellow trend line happens to be, and then we'll see what kind of reaction we get, at least for now. So with that being said, I just want to say that there's a good chance we try to hold this support. As long as that holds, we're looking for 56.71, then eventually towards 5,700 as our targets. There's a good chance we get that rebound, whether we get one more dip first like this and then we grab liquidity and bounce, or if we just bounce from here. I do favor upside. I think there's going to be a bounce coming very soon, but that depends on the data. So just to be safe, you want to be open-minded. On NQ, if we're bearish, so this actually closed, or it didn't really close, but technically it's in the green. If we end up losing 19,200, we're looking for a dump back down below 19,000. If we manage to break above this blue trend line, acting as resistance around 19,700, 20,000 becomes our potential target. My gut tells me we kind of push a bit. We might be attempting to bounce here. If this resistance breaks, we're looking for 20,000 as our target. I think there's a good chance we try to go for that. For Bitcoin, we have a nice inverse head and shoulders like pattern. If we end up losing 82,000, we're looking for a dip back down to about 80,000 flat. And as long as we can hold that, we could be looking for an attempt for 84,000. So we'll see if Bitcoin makes a move like this where it dips and starts to rebound off CPI. That there's a strong possibility of that, but we'll see, just to be safe. In case we lose 77,000, I will turn back to bearish. I'm very open-minded to anything, but I do lean in favor of us getting some kind of dip move, then a bounce. I still favor that a little bit more. Nvda is trying to hold right here. As you guys could tell, we have a bullish divergence on it. I want to see us break 111. If we break 111, we're going to be looking for 115 as our target. If we're bearish on Nvidia, you want to see us basically reject here and fail to hold 105. If we fail there, we're looking for the low 100s. So it could go either way, whether we get some kind of dip move first before it tries to break out. But keep in mind, there's a lot of catalysts involving politics and Donald Trump and then the CPI. Tesla's looking somewhat promising. It's been forming a triple bullish divergence. There's a triple bullish divergence right here. That's a good sign. And we're trying to base at 215. So like 215 to 200 could be a nice bullish area. If we end up losing around the 220 area, we could be dipping back down towards these lows, if not lower, if we get a bad CPI. If we get a bounce after CPI, you want to continue this push and then try to get back up towards above 240, which would push us up to about 249 to 250. My gut tells me we are favoring that. As long as we hold above 240, we're looking for essentially 249 as our targets. I think there's a good chance we try to get up there, so watch that very, very closely. For Apple, Apple right now is kind of stuck. We're making lower highs and lower lows right here. So watch the support at 220. If that holds, we're looking for 226. If we lose 220 to 218, we could be jumping towards 215. My guts tells me that there's a good chance that we end up getting some kind of rebound move. As long as 220 holds, we're looking for 226 for that imbalance fill. So it depends on what Apple ends up seeing with the CPI release. But for now, there is potential is trying to base at 220. For the rest of these, we have Netflix trying to bounce here. It depends on CPI. A bad CPI could dump us back down towards 870. A good one wants us to break 907. If we break that, we're going to be pushing back up towards the 920s. So we'll see. We're favoring upside a little bit more, at least technically speaking. So we'll see what happens with this CPI report. For Microsoft, we have a gap to, sorry, not Microsoft, I'm sorry, MicroStrategy. We have a gap to fill back up towards 283. There's a bullish divergence here. We need to break 266. If we break that tomorrow, I think we push for 285. If we end up losing 250, we're going to be looking for a dump back down towards these lows. This is favoring upside a little bit more. For Celsius, we are looking a bit more bullish. Inverse head and shoulders like pattern. I just want to see us hold above 26.5. If we lose 26.5, we dump. As long as we hold that, we could dip and start bouncing for it very close to 30. For Supermicro, if we could break past 41, we're looking for an attempt to get back up towards 48. If we end up losing 38.8, we could be dipping back down towards 34. With this nice accumulation, we could be pushing for essentially 44. For Palantir, we have a bullish divergence. I want to see this break past 81.1. If that breaks, we're looking for 86.73. If we end up losing support right here around 73.5, we could be dumping even more. For Rivian, we're on a downtrend technically, but if we are forming a bullish divergence, I want to see us get back above 11.08. If that breaks, 11.5 is coming. If we lose 10.5, we're going to be dipping more. So I do see a bullish divergence and some potential for some kind of rebound. For SoFi has this support right over here around this 10.75 area. If that fails, this we're going to be dipping. As long as we hold this divergence, we could be looking for an attempt for 12.1. So I think there's a good chance we try to bounce. For AMD, we have resistance around this 98.5 area. If we lose 95, we're bearish. As long as this divergence holds, we're looking for 98.5. For ARM, we have a bullish divergence. If we break past 119, we're looking for an attempt to get back up towards 125. If we lose 108, we're looking for a dump here. It does look a little bit more bearish for now. If this dips a little bit more, we'll see. We are weak, but we'll see how CPI affects this. Coin has potential, but we need to get back above 200. If we break that, I think we fill the gap for 212. If we end up losing 179, we could be dumping a lot more, but I'm favoring that upside move a little bit more. Amazon is looking pretty good. We want to see this break past 200, 199 to 200. If that breaks, I think we easily go up to this imbalance towards 205. If we end up losing 194, we could be dumping a lot lower towards these low 190s. So it could go either way, but I think the 4-hour has potential. Meta has 619 as resistance. Break, then I think this thing is going to be launching for this previous support becoming resistance around 630. And then we have 643 above that. If we end up losing 600, I'm looking for a move back down to about 590, so it could go either way. I'm thinking it might dip and then try to bounce, but it depends on our CPI report. Microsoft is very flat. You want to break past 387 to bounce. If we lose 375, we could be dipping, so it does still favor that it wants to base. I would like to see Google base here with this bullish divergence to try to get back above 183 to push for 170. 183 is going to be the main resistance. I'm sorry, 163 is what you want to break, then 168, and then we're going to be looking for 170. So excuse me, guys, a little mistake there. For GameStop, we look bullish. Going to be looking for an attempt to get back up to 23. AMC is kind of flat here, looking for 3. DJT is trying to hold 19. We'll see if that holds. The VIX has a triple, I think it's a double, actually almost a triple bearish divergence. That suggests that the VIX is going to be dumping soon. We have these gaps to fill, so we'll see if these are the factors that end up panning out. Also, the 10 years looking bullish here, and so the dollar is kind of flat here. As the dollar is dipping, that tends to be a good sign for us, so we'll see how it goes. So honestly, guys, we could dump tomorrow. SPY loses 550. It's going to be a bad sign. If we end up breaking past 568, that's going to be a very good sign for bulls. We could go either way. It depends on CPI. I'm hoping a bounce will eventually come, whether we get some kind of dip in a liquidity grab first before we try to bounce, or if we just bounce from here. It depends on CPI and all this news involving Donald Trump, Ukraine, and the funding bill that's coming out. So we'll see. But for now, there's a bullish divergence, so I'm hoping we get some kind of bounce. I thank you all so much for listening. So please have a good rest of your day, and I'll be back with another upload tomorrow morning before market open. Until then, I wish you all the best and peace out.